And we are back. Guys, we took a mid-year break for about a month, but we're back in action. How you guys doing?
Fantastic. Great to be back.
Can't complain with the stock market ripping all-time highs day after day after day.
I don't know, man. If you were in the crypto space the last couple of weeks, you would think that everything's dead and it's just doom and gloom. And it's funny how fast market sentiment shifts from euphoria to panic and back and forth.
Oh yeah. The fear greed cycle. We love it. That's how we make money.
It keeps the world turning, keeps markets turning, right?
Yep. Right now we've got Bitcoin that's hanging out in the mid 50s. We've got this little thing called the NASDAQ, which is tagged an all-time high actually for the last 3 trading sessions in a row, looking like a kind of a midday reversal. So we'll see where we end up today. But one thing I think is interesting is the fact that, you know, NVIDIA and just a handful of tech are driving the majority of the gains. And if you look at Russell 2000, I mean, this thing hasn't done crap all year and it's well below its all-time highs. So is this a good sign or a scary sign that market breadth is so bad right now?
Yeah, you have really strong opinions on both sides. You know, I think some people have said, well, why wouldn't the best businesses in the world that are benefiting from AI be up a lot and everything else be lagging, which I understand to some degree, but come on, you're paying 55 times earnings for Costco. What are we doing out there?
It's the hot dogs.
The $1.50 hot dogs. Yeah, it's the only solace against inflation, I guess. But you know, it's pretty shocking to see the NASDAQ, you know, up over 20% year to date, and the Russell basically flattish, and even the S&P mid cap and small cap indices, you know, barely up for the year. I will say, if you look at the S&P 500, which is a broader index, you do have about 2/3 of the components in the index showing positive returns for the year. So it's not like Nvidia and Apple are the only stocks that are up this year, but it certainly feels like it for any investors who are in mid and small caps, or you know, doing some stock picking focused on smaller companies. So yeah, it's a very interesting story with market breadth. I mean, the QQQ to Russell ratio is at the highest level that it's ever been. The outperformance of the NASDAQ versus small caps is the strongest it's ever been. It's even stronger than what we saw in the .com boom, which is pretty wild to think about. So that has a lot of people saying, well, this has got to reverse at some point. We've got to see a correction in large caps, maybe a crash in large caps. But the question is, what's the catalyst for that? And what would even create that? Perhaps it's just momentum funds deciding that the momentum has turned at some point, and they put selling pressure on the NASDAQ, but we haven't seen it yet. And frankly, you know, you've still got the AI theme out there just crushing and kicking butt. You know, Tesla's up 30% in the last 10 trading days. So now it's contributing to the NASDAQ and the S&P, which
Tesla's actually green on the year.
Yeah. It was the worst performing stock in the S&P 500 at one point in the spring. And now we've got Tesla joining the party as well. So yeah, it's like every time you think that the NASDAQ or the NASDAQ or the S&P is stalling out, you have a new performer like Apple or Tesla step up. So yeah, it's going to be interesting though. We are going into earnings season here, really starting off at the end of this week and then full on in the later weeks of July and August. But yeah, it's mid-year 2024, looking back, it's surprising that tech continues to be so dominant.
Trav, I do have a question. I was thinking about this. I've talked about last year how a lot of cash on, you know, in money market mutual funds has accumulated trillions basically throughout COVID. And I kind of had this thesis that we'll see a correction, but it'll be from much higher levels because people were not expecting this bull run in the NASDAQ and S&P. They were expecting recession. So they were positioned for recession. And now we've got all of these people kind of FOMOing in. Not only do we have the momentum in the AI theme and the concentration of, you know, big tech helping in this along, but we also have people that weren't prepared for this bull run in any capacity kind of having to FOMO in and continue to FOMO in as it continues to run. I almost feel like there's like this reflexivity to this run right now with all of the different components, the AI, the concentration of big tech, the money market, you know, mutual funds that are chasing return now, because 5% in your money market. Great. What's the S&P up this year to date? Like
20.
20.
Yeah.
So it's like people are looking at that and they're like, crap, I have to get in, and it just keeps running away from them. So I'm wondering if you think that theory that I have is like, is that contributing at all? Like the FOMOing and the people having to kind of chase this with their cash?
Oh, for sure. It's the classic pattern, right? We see it in crypto. We see it in stocks. We see it all the time. Whatever's hot. It's funny. We're starting to hear whispers, or I'm starting to hear whispers from people that never even talk about the stock market about buying into Nvidia. And, it's like, really? You kind of missed
Yeah.
a big run already. You want to pile in now? Okay. And I think people are also doing that somewhat with Tesla here this month. They don't want to miss the run if they think maybe it could be the next Nvidia. And so, they start to see it rise, and all of a sudden everybody piles back in. And so I think there's definitely a lot of herd chasing going on, and it's classic behavior. So it does start to make me a little nervous, to be honest.
I've heard anecdotal stories of people running into like people with Nvidia coffee mugs or shirts on, and people being like, you work for Nvidia? Ooh, and like the girls loving it and the guys being jealous. I mean, I think that like somebody did a survey of the wealth levels of different Nvidia employees, and I want to say it was over like 30% or worth over like 20 million bucks now. That's crazy.
Yeah, I saw
Hey,
a comment the other day that if you go walk through, the Nvidia corporate parking lot, that you'll be shocked at the number of luxury autos.
Yeah, this isn't a top at all. Yeah.
I'm sure that equity compensation is feeling pretty good right now. I hope
Oh
people are
yeah.
managing it well. Call me
Oh
if you need
yeah.
help.
Well, you know
That's
who else was feeling really rich with their equity compensation that probably isn't doing so hot.
Oh, which one?
Come on, guess. What's a stock that like went crazy and then like dumped and had a lot of kind of celeb
Oh
like
God.
employees?
Oh, I don't know. Peloton?
GME?
Peloton.
Oh,
Peloton,
I
Come
okay.
got it.
on,
I
man.
got
Look
it.
at
I got it.
Peloton. Look at this thing. So yeah, during COVID, they couldn't sell it enough bikes and the stock went nuts, and then it's down like 90 something percent. I kind of feel bad for any of those like instructors that were worth tens of millions of dollars, if not more. And then now they're looking at their portfolio like,
This
And
is
we've
why
seen
yeah.
We've seen
Go ahead.
some Peloton instructors leave recently, and I think that's probably a combination of, their new contracts not being nearly as rich as they had a few years ago, and then also looking at their stock holdings going, maybe I can build my own brand outside of Peloton, because right now this Peloton stock isn't giving me very much. So yeah.
No.
yep.
That's a good lesson though. The good lesson contrast in NVIDIA and Peloton and many others in making sure you manage your stock-based compensation well, because you never know, right?
Yeah, Nick, I mean, you have experience with that, working with employees of Meta and
Yeah. Meta.
SpaceX and stuff like that,
Yeah.
right?
Yeah, and it's really important to just be careful, because you don't want to be in that situation. Wasn't Cisco another like fall from grace?
Oh
Like
yeah.
a lot of people had a lot of stock in Cisco and it ended up failing, and there's just all kinds of stories about that. But I'm sure
Yeah.
Nvidia is going to be fine for a long, long time to come. But
Oh, hopefully that doesn't turn out to be a bad clip for the future.
So
It's down 99%.
I do think it's going to be interesting. I do think there's starting to be a lot more conversation about the return on all the CapEx spending from, especially the big techs like Meta that are spending, and Google that are spending tens of billions on Nvidia chips this year, and they're all sort of like FOMOing into buying as much Nvidia capacity as they can. But that actually could become an earnings headwind for those companies, because next year they start depreciating a lot of those GPUs, and increasingly that CapEx has to have a return. Otherwise, investors are going to start questioning why those companies are spending tens of billions on new CapEx. And so that could become a headwind for Nvidia at some point if we get a big pullback in demand for GPUs, even if it's just for a short-term period, right? A couple of quarters. Maybe companies decide that they need to tighten the belt even just a little bit on how much CapEx they're spending on Nvidia GPUs. They realize they've got more capacity than they thought they would need. And so that could become an earnings headwind for some of these larger tech companies, and then eventually be a headwind for Nvidia when orders pull back. So I don't know when that happens. Maybe it's a 2025 or 2026 event, but it's almost guaranteed that it will happen at some point. So certainly I would expect a pretty healthy correction in Nvidia at some point. Maybe it's only 20%, whatever the number may be. Probably not 99, but hey, never say never.
Yeah, it's interesting to think about like just how a handful of companies are driving most of the gains and the risks that come with that. And Trav, like you said, I mean, there's debates on both sides if that's good or not. And I've just been thinking a lot about the correlation or the inverse relationship now with Bitcoin and the S&P or the Nasdaq. It for the first half of the year they were tracking very, very closely. And I think this latest all-time high break has really just been dominated by a couple of companies. And then on the Bitcoin side, we had the supply from the German government and Mt. Gox. And so that created kind of an initial like fear-based reaction, and the selling begot more selling. And granted, I mean, this is still a much lower pullback today of 25, 27% or whatever, compared to prior market cycles where 30 to 35% pullbacks were commonplace. But it's just interesting to see that inverse relationship. And it's not that I think people are selling Bitcoin for Nvidia stock. I mean, I'm sure some people are doing that, but I don't think that as a whole, that's what's driving price. But it just, I always look for signs of either correlation or inverse relationships. And it's just really interesting to see how stocks broke out to that all-time high. And not only did Bitcoin not go with it, but it actually went down. And so these narratives, it's like as soon as they start to become obvious, they usually stop working or reverse. So I think what we're seeing now is a lot of people actually dip buying the Bitcoin ETFs and also just the spot markets. But this is something that Bloomberg was reporting on, just like the ETF flows and how over the past couple of days, we've started to see demand come back for that. So right now, I mean, we're in kind of a precarious spot as far as like TA goes. We're below the 200 period moving average, but just because that's the case doesn't mean we have to go into an extended bear market. Actually, last summer we dipped below the 200 period moving average and we hung out for like 60 days before squeezing shorts. So I don't think this should be like a knee-jerk panic reaction. But what do you guys think? What are you guys seeing out there in the crypto space or hearing from crypto Twitter? I've been kind of like simplifying my input over the past couple of weeks. So I've been ignoring a lot of those typical kind of market sentiment cues.
Yeah, it seemed like there was, as far as narratives that were given for the sell-off in Bitcoin, none of them felt that satisfying to me. So, maybe it's just a run-of-the-mill, risk taking a little bit of time off, or shifting elsewhere for the time being. Maybe it's because of a slight, economic softening or something. But there was, I guess, the very short-term narrative that like Bitcoin was down because people were rotating out into other stuff that was outperforming, or there was something else, right? I can't recall all of a sudden that a couple of weeks ago there was some like minor negative thing, like was it like a slight outflow from the ETFs? There
was a little bit outflow, and then the biggest thing that I think people were thinking about was the Mt. Gox supply that was hitting the market.
Yes.
So that's about $9 billion. And so I think people were like kind of trying to front run that. And I had a Twitter thread and I talked about it in the Daily Doe also about how I thought that was kind of overblown. In the short run, I'm not surprised to see the pullback based on that. But again, these sometimes can be good dip buying opportunities. And as we're seeing on the ETF flows, people are definitely taking advantage of that. So,
well, we also have to remember that like the Bitcoin basically was retesting that all-time high. It tested it 5 or 6 times, and it had a major run into that test. So, I mean, can we really say that this is that bad when you zoom out and look at the big picture? It just doesn't feel like it's that big of a deal. It actually feels a bit healthy after what Bitcoin did into that run. I mean, that was a major run.
Especially if you zoom out and you look at a monthly chart. I mean, basically, if you look at this 7-month leg up, really all this is so far is a 38% Fibonacci retracement,
which is nothing. That's healthy. Like that's good.
Yeah. That's why, like in my YouTube video I posted yesterday, I talk about how I start by looking at the larger time frames. And if you look at the monthly and the weekly, And obviously, I mean, this can shift on a dime, but so far, I mean, we moved so quickly, from 25K to 70K, that market needs a pullback. And I think, we did have some euphoria there, especially with like the meme stuff. And, when the market gets overheated, the market likes to cause people pain and liquidate stops and things like that. And that's what I think this is. I don't think that this is a shift into like an extended bear market. I could be wrong, but I'm just not seeing that yet.
Yeah.
Well, when you
And
pulled
Bitcoin's
up,
still
oh,
up.
go ahead.
Oh, I was just going to mention too, Bitcoin's still up 90% over the past year and up 35% year to date. It's funny that, we are having to even talk about weakness because it's still one of the best performing assets over the past year.
Yeah. I didn't mean to cut you off, Trav, but I was going to say, Chris, that chart that you just had up, I think you said it was a monthly. If you go back to it, you can see those prior two corrections, the Fibonacci, the retracement that they had, we're about halfway compared to like what those saw in relation to their runs. So Bitcoin could absolutely continue to fall here. But when we look at that bigger picture, it's just kind of repeating what it's done in the past. And so I don't know, it's just not as scary when you look at it in that framing, which I know you described in your YouTube video, that exact point.
Yeah, I mean the moving averages on the weekly and the monthly are still really, really far behind. And so, there was a potential that we could have broken out quicker, like, on that fifth or sixth test of an all-time high. But yeah, I'm not surprised to see this liquidation event. And, again, there's always a narrative. There's always a story. The German government, the Mt. Gox coins. Okay, we've got some FTX potential bullish pressure coming. Whatever. There's always something. But at the end of the day, I just like to kind of see the forest through the trees and look at the bigger picture and then try to trade around those like larger ideas. Yeah. The other thing I thought was interesting, Trav, to your point about how like Bitcoin's up 90% over the past year and 30 something percent year to date. And I was looking at that. I was like, all right, stocks are up, Bitcoin's up, gold's up, real estate, I guess, questionable, but most assets are up over the past year and year to date. So I was kind of curious, like where people were on their net worth growth. And so I sent a survey out on the Twitter X, whatever platform. And I said, over the past year, how has your net worth grown? Is it either up over 50%, up over 20%, about flat, or down? And what I thought was interesting is even though all these asset classes are up so much, about 44% of people are either flat or down. Now, the most common response was up over 50%, about a third of people, which is awesome.
We have some concentrated crypto investors for sure. That's the only way.
Yeah, I don't know. I mean, we've got some talented traders in the community and, we've got people that are definitely more aggressive. So I'm not surprised to see a lot of people up over 50%. I mean, that's awesome though. Not just 50% gains, but 50% like net worth growth in a year. That's awesome. But I was more curious. I know there's going to be a lot of people that are making money right now, obviously, but I was more curious about the, roughly half-ish of people that are either flat or down and why. And I sent another tweet. I won't share any names just for, privacy purposes for these people, but I got a lot of DMs and a few replies. I asked like, what happened? Like why is your net worth either flat or down? And I got a mixture of, they either took big risks that, they had like big losses, like in Celsius, or over trading, things like that. And then also like certain things like life got in the way, like somebody lost a job or they were too scared to actually be in the markets. So they sat in cash, right? Or they got their 5% returns. So hindsight's always 2020, right? And it's easy to look back over the past year and say, holy crap, like everything's up. But it's not always that obvious looking forward. So if we rewind a year ago, there was a lot of risks with inflation and things like that. And so there are a lot of people I know, specifically in crypto, a lot of people that have missed out on this bull run so far because they were so distraught or shaken up by the FTX implosion, which was a big deal. And also in stocks, a lot of people coming out of the COVID hangover were afraid to buy the stock market, right? What do you guys think about that?
Yeah, I was talking to a very, very successful gentleman. He's in commercial real estate, M&A, mergers and acquisitions. He's super smart. Pulled out of the market at the lows, never got back in. I saw him, I don't know, a couple months ago, asked him again, like, hey, did you ever get back in the market? Still no. And it kind of speaks to a point we were going to get to at some point. Basically, a tweet that went out that was like, hey, if you are financially literate, is it still worth hiring somebody to help you, or just like getting in touch with professionals that have education, or just getting the ideas from professionals versus just what you think you know? And it really speaks to that, because this person is extraordinarily financially literate, like to the nth degree, but they were not financially literate enough to be able to time the market well, and they pulled their money out and missed out on this whole entire S&P 500 run. So it's just, it speaks to that so deeply. And there are a lot of people that are in his exact same situation, right? They're smart people. They're great, but guys, like, trying to time the market can be a tricky thing if you don't know what you're doing. And that's why, like, our community members, we love what we do in the community, because we're kind of guiding people through those scary, scary times so that they don't make those mistakes, right? Or what you talked about, Chris, the people that said their net worth was flat or down, they can avoid that fear, and they can kind of be more comfortable with markets and how they work. So it's why we do what we do, because that really gets people, even if they're really financially literate, right?
I think it's like interesting too. You had a tweet the other day, Nikki, that speaks to why do we invest at all? And it's because we're all fighting the money printer. We're all fighting the inflation demon over time. Like, it fluctuates from year to year. Some years it's worse, some years it's better. But overall, like, we're expecting the dollar or whatever currency, if it's the euro, they're all depreciating in value over long enough periods of time. And so we have to be in the market looking for assets that appreciate, looking for stores of value that are going to appreciate over time. And that's why we do what we do. And we've seen the data. Even people that are financially literate should know the data says that you really shouldn't ever be fully out of the market, especially if you have income where you can be DCAing. So look, if the market falls 20 or 30% in a bear market, you should still be DCAing. You shouldn't be worrying about trying to time it, because obviously, like, you're going to be able to add capital along the way to reduce your cost basis in these assets. You're going to be able to take advantage of the corrections if you're doing it the right way, and actually create value there. So it's like, to be out of the market because you think you're gonna, all of a sudden call the turn from a macro perspective, even if you're financially literate, I think is a dangerous way to play it, because that inflation demon is eating and eating at you if you're out of the market for 6 months, 12 months, 18 months, 24 months, 36 months, or more,
Yeah.
God forbid.
Yeah, well
Nailed
said.
it.
I think, a lot of people are feeling inflation, obviously, but guess what? There's like at least 3 million people that maybe aren't feeling inflation so much, because the TSA just broke the record for the most people flying in a single day. Nearly 3 million, 2.99 million people flew on Sunday, June 23rd. What do you guys make of this?
I think that it's kind of like we always said, we knew services and vacations and things were going to kind of be in this crazy high demand after the pandemic stuff eased up. And I think it's just a continuation of that, theme that people want to get out. I mean, I'm still talking to friends that are booking trips and wanting to do girls trips, and they can't get enough. And do I think these people are still feeling inflation? Absolutely. I think that a lot of these people are probably struggling financially, but I know a few people that just don't care. Like, they're putting it on the credit card and they're going. And it could be a little bit of that's happening, but people want to go out and experience stuff.
Speaking of experiences, if anybody's looking to have a retreat and an experience that's not just getting drunk on the beach in Cancun. Come hang out with us in Austin, Texas in September at the Wealth Building Retreat. Go to wealthbuildingretreat.com and you can see what this is all about. It's a 4-day, 3-night event where we're going to be having a bunch of networking opportunities. Nikki's going to be doing some financial planning. We're going to have 60-minute training sessions. It's been over 5 years since we had our last event. So again, that's mid-September in Austin, and we do have some spots open. We just opened these doors this month, and go check that out. I think you'd really get a lot of value out of that.
Yeah, we have a lot of higher level topics that we're going to be diving into. Things that kind of take a little bit more time, and it's sometimes easier in person to explain some of this stuff and be able to get that instant feedback with your professional or whoever you're talking to or your teacher. So I think it'll be a really good way for people to kind of take things to the next level in ways that they might not be able to do over the internet, so to speak.
Yeah, there's no substitute for in-person relationships and networking and education, and yeah, just so many benefits.
And you get
Plus,
to be
we're
in
gonna
my,
have some. Go ahead.
Oh, I was gonna say you get to be in my backyard. So, we're gonna mix in some fun stuff and show you the cool spots too. In addition to doing the education side, we're gonna have some
Oh yeah,
entertainment stuff too.
we'll have some
it's gonna be super
fun. Don't worry.
Oh yeah.
Absolutely. Speaking of fun, let's talk about the election.
Oh.
Oh my God, what a wild ride this has been. And I don't really care anymore. I think this is probably the most disappointing election cycle that, most people are just over it. But one thing that I just think is nonstop entertainment is the wild volatility in the betting markets. Is Biden going to drop out? Is he not? Who's going to be the Democratic nominee? Does it even matter? Pretty wild to see the capitulation where Biden is back up to a 70% chance of being the Democratic nominee after a pretty big drop over the past couple of weeks, especially after the debate, which went really well. I think Joe did a fantastic job. What do you guys think?
So I actually got I can't believe I did this, but I sat down and I watched it more for entertainment purposes. Like I just kind of wanted to see what kind of entertainment would come from it. And the memes, the live memes that come out through Twitter, and I don't know, it was a dumpster fire. It's all a dumpster fire. It's terrible, but I can't believe I sat through that debate. It was horrible on both sides. It was
Trav,
just
did you watch it? I just watched the highlights, but
Yeah, I just caught some highlights. Yeah, it's like you said, it's probably the most disappointing election of my lifetime thus far. I hope they don't get worse, but I don't have a whole lot of optimism just in general over US politics. But yeah, we have to track it at least for purposes of being investors, and we try to think about how this is going to impact different asset classes or different sectors of the stock market. And so we've been talking through that here in the community some, and looking at potential winners and losers based on each candidate or each party. Still, a lot to be decided, even though we see, for instance, the presidential election probability market or prediction markets are pricing Trump at a pretty significant win rate right now. There's still a lot that can happen too, even in the legislature. So the Senate and the House, control of those. There's a lot of races obviously happening in the state level that could make a difference as far as what legislative policies can be enacted in the next few years. And so that's going to have an effect as well. So yeah, there's things that we're watching pretty closely here, but as far as the overall perspective, when you zoom out, it's hard to get very excited. And certainly it's easy to get pessimistic about the future of the country based on what's happening. But yeah.
It was pretty funny when I was watching it, the question about expensive, childcare is very expensive in the US. It's like a mortgage payment for a lot of families. And that question got asked to both of them. And the question didn't even get answered. Like they were so all over the place and like trying to backtrack to prior questions before that. They just completely whipped right by that question. And I'm like, this is the question Americans want an answer to. It felt like every question that Americans would want to hear what they have to say, somehow they avoided answering it. It was the most wild thing ever.
It just blows my mind that this is still how we're doing debates. with
Mhm.
this very short time, just terrible format. Like, we need a Joe Rogan format, like long, just slow interviews, let him explain. Joe
Yeah,
may or may not be the right guy for the job. I think he would probably do a pretty good job at moderating it, but yeah, why not have more than just these sound bites and talking over each other and avoiding questions? Like, it's so
exactly.
terrible.
It's so easy for them to just avoid questions completely with that format. It's terrible.
Hey, at least they were talking about their golf handicaps, right? The
Yeah,
very, very important topic.
that
Oh my
killed
God.
me. That
Oh
The thing that
killed
man.
Americans
me.
really need to know. Yeah.
It's
Right,
like, we don't
exactly.
get your answer about childcare, but we hear you two bitch about your golf handicaps and, you know, go at each other about your golf swings. Okay, this is it? All right. It's so
Well,
annoying.
I think this is a good time to pivot into some macro talk. I know one of the big things over the past week was the fact that unemployment is ticking up just a little bit, but is this a bellwether for worse things to come on the employment front? Or do you guys think this is just a little pop in the grand scheme of things?
It's a really important topic. I'm glad you brought it up because, small caps are already sort of looking like they're pricing in and the high potential for recession. If you're looking at the performances of small caps and economically sensitive stocks recently, you can tell that investors are concerned about the softening economic data and the unemployment rate being front and center. I mean, if you go back and you look at history, which I did the other day, and look at all the times where unemployment, ticked up for more than say 4 to 5 months in a row, typically what you see then thereafter is a significant spike in the unemployment rate. So, will this actually be another data point that confirms that? And it's maybe a little too early to tell. And look, we are coming from a very, very low level of unemployment. Perhaps it was depressed even too far below where it would have been given what happened during the pandemic and with the fiscal spending. But, you can't ignore historically, once the unemployment number does start to tick up for 4 or 5 or 6 months straight, then it tends to go even higher in the months after. And that would suggest that we're headed towards, 5+% unemployment if that trend were to play out here. And we're also seeing, by the way, the Atlanta Fed's GDP forecast for Q2, it's gone down from 3% GDP growth forecast to like now closer to 1%. So it's not just the unemployment rate, it's other data points. The ISM manufacturing and the ISM services number this past week were fairly weak. The services component of the ISM actually declined for the first time in a few months. So we are seeing data points suggesting that there is some softening happening in the economy. Now, I'm not saying we're headed into, a terrible recession, certainly not saying we're headed into anything like 2008, but it's clear that these concerns are rising and that there should be some investor concern over what's happening with the overall economy. So it's still early, but signs are a little bit troubling there. And the real question is, if we do get a weaker economy, what does that look like? Are we going to actually have GDP shrink? Are we going to have, a massive unemployment spike, or will the Fed step in quickly with rate cuts to basically just put us back into kind of this, choppy level that we're in?
Mm.
I mean, that is kind of the saving grace, right? Is that the Fed raised enough to now they kind of have that wiggle room. So that's an interesting thought experiment. Like, if
Yeah.
things start to unravel, which they're kind of starting a little bit, right? But not bad enough. But if they really start to accelerate, the Fed can just more aggressively cut. And then are we back to balance there? Like, quicker than we expect? And do we avoid a big bad recession? We have a slowdown, but maybe it's not a big bad recession. So I guess that's an interesting thought, how now the Fed has that wiggle room to kind of protect us, so to
Yeah.
speak.
Yeah. However, you could look at 2007 and, the situation was similar there. Like rates were, I think I'd have to double check, but I think pretty close to where they are now. And the Fed started cutting. Maybe they didn't cut quickly enough, but there was room then to cut. But we got a full blown financial crisis
Yeah, I mean,
instead.
that was a bit more extreme, I guess, but
The
I
good
don't
news
know.
now, I think the difference between now and then, one big difference is that, bank balance sheets are healthier for one. There's not as much leverage in the banking system, which is good. We still have
Mhm.
some leverage, not as much. And then also, consumers have had a little bit more time over the past 2 years to kind of get their houses in order because, the housing market did slow down there for a while. So it's not like we're going from peak euphoria all of a sudden to, panic phase like we did in 2008. So, it's there. The other thing too is, there are other things that are positives as well that we didn't have. Corporate credit is a lot healthier. Corporate balance sheets are a lot healthier. So we're at a healthier starting point in most other parts of the economy than we were in 2007, 2008.
Also, a lot of people have locked in low mortgage rates too.
Mm-hmm.
So that's
Good
another
point.
factor.
Yep.
We got a question that I think kind of goes hand in hand with all this conversation on the macro and the stock side. Black Swan Investor was asking, are there any macroeconomic or market signal data that suggests that we should overweight to value stocks and now underweight growth stocks for Q3 or vice versa? Because, growth has just been kicking ass. Do we think that that's a trend that's going to change? Is there any signal that could be a shift in the future?
Wow, what a timely question. We've been talking about the outperformance of momentum and big tech versus small cap and mid cap. I mean, if you look at valuation multiples, it would suggest that we're due for some type of reversion. We're due for small and mid caps to outperform at some point. But typically, if you go back and look at the time periods where small and mid caps have outperformed, it's when the economy is doing pretty well. So if we have a softening in the economy, there's a lot more cyclical stocks in small cap and mid cap indices. And so it's like, well, how do you expect small and mid cap stocks to outperform if we do head into, an economic slowdown? And that's the trouble here, is like valuation isn't really a good timing signal. So even though it says we're due for some big reversion out of large caps and into small and mid caps, I don't really see any shorter term timing signals that would suggest that, we're due for that, at least not yet. And Chris, you always say follow price action because it's truth. And I think that may apply here because prices are telling us investors don't seem very excited about small and mid caps right now.
Yep. Yeah, that's a strange one. It's I think a smart idea to try to think about, right? Because things are so expensive, but yeah, it's hard to get there. I was going through just pulling up some questions. We got obviously a ton of questions on like Bitcoin pulling back and what the thoughts are there. Let's see. What is your opinion? Cayman Crypto is asking, what's your opinion about a 2019 like scenario for Bitcoin where we get a short-term bear market, consolidate around 30 to 40K, and then run to 120K? Another question is, can we have a chat about the Bitcoin struggle to stay above 60K and the looming correction in the stock market? Is the Bitcoin bull market over? If you're sitting on large amounts of crypto, how do you get that into your bank account? Sending it to Coinbase, then taking it out of the daily limit while it sits there seems sketchy. Yeah, I mean, there's different limits. I always say, like, try to have accounts with all the major exchanges and then do whatever KYC you need to maximize the withdrawals. And then, yeah, if you need to stagger it, if you're dealing with big amounts and, maybe send, I wouldn't just send millions and millions of dollars at one go and then like leave it there to pull off over the course of several weeks or longer. You could always send a little, pull it off, send a little, pull it off.
And there's private OTC desks as well out there for.
Yep, absolutely. Yeah. If you're looking to do a big block order, OTC is probably the way to go. I generally like to scale out, so it's usually not a problem. But yeah, let's just talk about the price and like, I guess, some not predictions, but some possibilities and plans, at least how I'm thinking about this. Again, could this just deteriorate and go back into an extended bear market? Sure. Anything could happen. I'm still holding. And the first question about like 2019 was kind of like this, where we had a run up and then we consolidated from the summer of 2019 really till the fall of 2020. So it was for over a year. We had the COVID crash in between that, which was a good opportunity. The difference here was we were below the prior all-time high. So right now we're sitting still close to all-time highs, or at least the major kind of 60K resistance level. So like I mentioned earlier, I mean, this is so far a 38% retracement of the last leg of the bull market. And I think we had a big liquidation event. I think there was some fear from Mt. Gox. Do I think this is over? I don't think so yet. My opinion could change in the future, but again, I'm still looking for bull market setups. If we go down to the daily chart where we can get a little more color And if this is not able to recover and get back up above the 200, that's where I start to think that, okay, maybe we're going to have more of an extended, at least medium term bear market or choppiness or consolidation. But yeah, I mean, so far, all of the, at least most of the on-chain data and some of the fundamental factors are still very bullish. And we've got a lot of developments and progress in the ETH ETF. So there's obviously been volatility in anticipation of that. But yeah, I've kept my portfolio very simple so far this year. I've been trading just a few higher quality alts and then holding the majority in Bitcoin, ETH, and Solana, and just kind of real quick in and out anything else. So I think it does make sense to be risk adverse on alts because a lot of those are like holding hot potatoes and you don't want to be the one left holding the bag. So that's my opinion.
I think the people in Bitcoin need to really be asking themselves at what price would they want to be adding to their portfolio, because get ready. Like, I can see, you said we're around a 32% retracement. I can see us getting to a 50% retracement. That's about
Easy.
what the last two runs did, right? So
Yeah.
like I said earlier, if history repeats itself, we have downside to that 40 to 48K range. Be prepared for that and play that out in your head and decide, what will I be feeling at that point? Will I be wanting to add to my position? Will I be excited? Will I be fearful? Prepare, get ready now. But like you said, Chris, this could very well just pop right back above the 200-day moving average. I would definitely be using that as the guide from the technicals and kind of seeing what happens. But we're not quite ready to call direction yet. We need some more price action and some levels to break either up or down from here.
Yeah. I don't think we're at an extreme. Like, we haven't had a 30% or more washout in a few days, which has a very high probability of a bounce. So yeah, I don't know. I'm still, like you said, just waiting for market direction to kind of confirm itself.
But do we think Bitcoin is dead? No.
Yeah, man, it's done for.
Do we think it's done for? No.
All right. What else, guys? I know we are about to have a really busy few weeks of earnings. So what are you guys looking forward to with this?
Well, just getting back. I feel like it's been so quiet. Like, I'm kind of excited for earnings season again. I'm like, don't know what to do with myself. So I'm excited to get back into that and see if these companies, because earning expectations for the back half of the year actually held up pretty well throughout the last season. So the question is, are we going to start to see revisions downward of earnings expectations for the rest of the year once we get this next quarter of earnings? So things were looking good, but anything can change at any moment now. So more data is never a bad thing. So I'm excited about that.
Yeah, that's a great point, Nick. I think honestly, if I'm looking at the numbers, double-digit earnings growth for the back half of this year and then again next year, that's what the overall expectation is from analysts. And I think that has to come down given what we're seeing with the economic data softening. So I'll be shocked if we see in aggregate companies able to meet that for Q3 and Q4 guidance. So I do think we're in for potentially a pretty choppy and volatile earnings season. As always, there's going to be some big winners and some big losers, but I'm going to be watching to see early on the first 2 weeks how the stock reactions are, and what guidance looks like. I think that's going to be very important because I think we are probably due for some aggregate earnings revisions downward if we do have a softening economy. So how will the market react to that? Will be very interesting to watch. Not calling for like a massive correction right here during earnings season yet. But I think we have to be on alert for some potential for maybe negative reactions.
All right. Well said, guys.
Yeah.
Well, guys, one more thing. Make sure, go get your ticket to the Wealth Building Retreat. Go to wealthbuildingretreat.com. I'll link it up in the video description. And also, if you're not in the community, go to wetalkmoney.com/community. And get into our Discord and our live classes and all that good stuff. And yeah, it's good to be back. Hope you guys are all having a great summer. looks like we have some, like Nikki said, it's been quiet, but hopefully with earnings season and this volatility in crypto, things really start to heat up again. So, all right.
Yep, we've got inflation data coming here at the end of the week as well. That's always a fun time. See how the market reacts.
All right, guys. Well, thanks for joining us. Be sure to like up this video if you got value from it. Subscribe on your favorite, or leave us a review rather on your favorite podcasting platform. And
That'd be awesome.
we will see you guys next time.
Thanks.
Take care.
Cheers.
See ya.